which are cash disbursement schemes. Uh, Companies, nonprofits, government agencies, whatever. Excuse me, my nose is very itchy. Maybe it's because I have my cat right here. Um, they have to pay bills. They have to pay vendors. They have to pay payroll, pay expenses for their workers, what have you. And so there's money being disbursed. So the cash disbursement schemes are ways in which employees of your organization are. I'm going to turn that camera off just so you don't have to watch me itching my nose all this time. Okay, here we go. Employees of your organization are using, or shall we say, manipulating the firm's cash disbursement system in order to enrich themselves. Okay, so that's what we're talking about here. Again, I've gone through some of these slides in the recorded lecture, but I'll fly through them right now. There are the modules that we're going to be looking at. Billing scheme. We're going to talk about check tampering schemes. We'll look at fraudulent payroll disbursements. We'll review fraudulent expense reimbursements, and then register schemes, or really cash register schemes, though these days we mostly call that a point of sale terminal. And so we'll talk about that. Okay. Billing schemes. Again, I talked about this last time, using false documentation to cause employer to issue the payment. The actual disbursement is performed by the organization in a manner, as a legitimate disbursement. And we have three types in our big flow chart of fraud. The shell company scheme, where you create a shell company. The non-accomplice vendor scheme, that's where you essentially use the name of a vendor to pull this one off, but the vendor is not involved in the fraud, okay? So that's why they are not an accomplice, okay? And then the personal purchase schemes. Again, here is the flow chart. Whoops, not yet. Okay, the shell company scheme. Again, I'm going to fly through these because I talked about them last time. You create a fictitious entity for the sole purpose of committing fraud, okay? Now, related to that is you might already have a company, a little-known company. As I say, we had a university in Illinois where an employee had a company of their own where they were doing refurbishing of kitchens, and they used that to pull off a scheme. But generally, it's a company created to do this. There's your flow chart for these type of schemes. And then how do you form a shell company? It's so easy. Again, you can go with incorporation if you want to. Those are generally a little harder, a little more expensive. Better to go with an LLC. You can do them online. Illinois do online. Iowa is actually cheaper. And you're not stuck with doing it in Illinois. Nevada, you can do it online. They're quite easy to do. And then then the Secretary of State of that particular state will issue you a certificate of, if it's a incorporation, or a certificate showing that you've created a limited liability company. And then you take that into a bank and you can open up a checking account in the name of, usually checking. I guess you could open a savings, but do it a checking account in the name of that company. Now, your name might be attached to the entity, but it doesn't have to be yours. As I say, we had schemers in Chicago who would actually go and find homeless guys and bring them into the bank, clean them up, bring them in the bank, have them sign their name, and the company, the shell company, would be in their name. And the address, if you want to use your home address, you can. Not too wise, but use like a UPS store post office box or box they have there, or one at the post office. Better to use the UPS store. Post office box, well, now you're dealing with the U.S. postal inspectors. Or, as I say, if there's a abandoned house, down the block from you, put a mailbox on the front of the house with the name of the company on it, and start collecting the mail there. And then again, documents used to start the bank account can be tracked back to you. So sometimes get someone else in there, right? And again, if it's a homeless guy, a drifter, someone like that, good luck tracking them down. And even if they do track them down, they won't know who you are. And now you can start sending out those phony bills to your employer. And it's especially good if you're working in the accounts payable department, because then you get to approve those fraudulent invoices and put them through the system to have those phony disbursements issued. Okay. Again, I talked about these. So here we talked about different types of schemes, how you get around the controls that you have in accounts payable. If you have a supervisor that just signs off on everything, fine, run it past them, they'll sign off on it. Create phony documents to back it up. Create that phony purchase order. Create that phony receiving report. Again, if you get someone in the other departments where you're supposed to have separation of duties, but if you're working together, if you're colluding, then the real fun happens. As we know from our studies, the amount of the median loss in a fraud that involves collusion usually more than doubles than someone doing it on their own. Again, if you deal with services rather than goods, they're looking for the stuff. They're looking for the inventory. They're looking for the supplies. But you make it consulting, who the heck knows what that is? And it can, cost a lot of money. So that the service schemes often work quite well. And especially if you make it, executive consulting to the CEO and CFO. Well, very often the folks down in the accounting department, they're not about to try and go up and ask the CEO, did you have this consulting? Just go ahead and approve it. Okay. And then the pass-through schemes. This is the one I was telling you about, the university here in Illinois, where the guy used his kitchen refurbishing company to purchase, as I say, for like $125,000, a high-end photocopier, but then billed the university for $250,000, which was the limit of funds that they had approved for it, and thus pocketed a nice $125,000 profit on the deal. Okay, and didn't have to worry about, the stuff was shipped directly from the manufacturer to the campus, so didn't have to worry about handling inventory. So pretty good stuff. Again, shell company schemes are among the most costly. How do you identify one? Such things as lack of detail on their invoices, lack of description. Again, thank you, Google Maps. It's very easy now to simply punch in the address and it'll show you where it is. I know I had one in Chicago where they had an address which essentially placed the company in the middle of Lake Michigan. So kind of easy to figure that one out. Again, if the invoices are coming in consecutively numbered, that would indicate that you're the only customer of this company. And if every bill is for the same amount, that could be a clue. Again, here's ways of testing for a shell company scheme. Again, you can, any firm, good firm that's got a computerized accounting system, an IT system, you'd be able to pull all this up. Okay, sort them by payment, sort payments by vendor amount, invoice number. Look for budget overruns. do a horizontal analysis, analyze expense trends, review your purchase levels. Is there a mismatch in your inventory? Look for, trending in the pricing. What sort of goods are we talking about? Or services? Again, if there's suddenly a peak in services, especially things that are hard to track down, photocopier repairs, consulting, etc. Take a look at that. A quick comparison of the vendor address to an employee address. Believe it or not, as I say, you'd be amazed how many fraudsters pull off one of these schemes and use their home addresses. And again, report the average turnaround time and invoices sorted by vendors. If your system can do that, many of them can't. But if it can, why? Because the fraudster likes to get their invoice paid right away and not going to wait, 25 days before it gets paid. Again, look up a vendor in the phone book. Look on the internet. But even the internet, okay, so you create a phony website. If you really want to do this right, create a phony website for the company. What you do then, if they have any photos on the website, do a Google image search to see where those photos came from. Okay. Contact others to see if they're familiar with the vendor and visit the address, or as I say, use a street view to see if they're actually there and what's going on there. Okay. How do you get the employee behind this shell company? Look at the company registration. If they incorporate or go with the LLC route, that's fairly easy. Most secretaries of states have that information online. Now, the other route you can do is just create a business with a fictitious name, and then a doing business as, a DBA certificate, is filed with a county clerk, and then usually a little ad is placed in a newspaper of general circulation back in the back. And it's one of those little ads that nobody really reads, but it's to put the world on notice that this new company is out there being, we're using this fictitious name for this company. Now, that's, actually a little bit easier to do. But again, your name will be attached to that unless you can get that, homeless person. And that's hard. You have to go, generally that information, unlike the corporations, the LLCs, that information is not online. You'll have to go down to the county clerk's office and look it up. And if you really want to pull this off, don't do it in Cook County or Will County. Go downstate to some little county that now generally you need an address in that county to set this up, but it's going to make it that more difficult for them to go down to that little county and find the paperwork on you. Again, if they use a mail drop, whether that be the UPS store or the abandoned house down the street, you can have surveillance on it. If they use a post office box, contact our friends at the USPS Postal Inspection Service, and they can do it. What the easiest way that they do it is they'll have the post office put a lock on the box and put a note on it saying, the lock is damaged. Go to the front counter to pick up the mail. And when they do, they're going to be asked for ID. Okay. And if it works, you might have a, USPS inspector right there. If not, they get an ID and they get your name that way. And again, if you have a suspect, search their office. Of course, always be cognizant of, doing this right. You may want to ask your general counsel about this, but generally what's, in an office on company property can be searched, but see what if there's a union agreement, see what that says. If you have an employee handbook, see what that says. Always make sure you're in compliance with the rules. Okay. The non-accomplice vendor, again, you've got a legitimate vendor who's being used here. They're not part of the scheme, but you have, as say, the pay and return scheme I talked about on the video about CBS Chicago, who had the employee that was, submitting a second time for payment bills from American Express, and then would contact American Express and have a refund credited to her personal American Express account. So it's that purposeful double paying of an invoice. The other would be intentionally pay a wrong vendor, intentionally overpay a vendor, and then contact the vendor and say, hey, we paid the wrong person or we overpaid you. Send us back the money, either the check you received or cut a new check and send it to us at this address. And you have it sent to another address where then you get possession of it. Other schemes would be to, again, use, create an invoice that looks like that vendor's invoice, okay, for a fake invoice, that you've created, or again, rerun an invoice that's already been paid. Here's your pay and return scheme flowchart. How do you stop it? Again, depends on your purchasing function controls, but keep an up-to-date approved vendor list so that if suddenly a different vendor shows up on it, it'll pop, okay? It'll generate a report, generate a red flag. A duplicate checking system that, if you're writing checks by hand, have the types of checks that create a copy right underneath it. Separate those duties, purchasing, authorized, and distributing payments. So yeah, when the boss signs off on that payment check, do not hand it back to the person from accounts payable, okay? You hand it to your assistant or whatever who mails it out. Copy each incoming check, attach admittance. Okay, you can, but not too many organizations do that. And tell banks not to cash checks payable to the organization. Again, I've never seen that in practice. Again, we have personal purchases with company funds. The heart of the scheme is not taking of inventory, but you're not taking stuff off the shelf in inventory. Rather, you're purchasing inventory and having it sent to you. Okay. You may create false invoices to pay for it. Or if the company has company credit cards, well, just charge it on the company credit card and have it shipped to you or delivered to you or whatever. The false invoicing, you buy an item, have the company pay the invoice. Cool. And if you're the one who authorizes invoices, has a duty including authorizing purchases. Again, smaller companies where you've got the office manager who approves purchases and approves payments. Boom, no separation of duties. Very easy to pull this one off. But you should have controls where the person who approves the purchase does not also approve the payment. And then, if necessary, create phony documents, okay, and create the phony purchase order, create the phony receiving report, and the invoice gets paid. Again, alter an existing purchase order to, instead of buying 5 personal computers, we make 6, and then you keep one. And again, you can also do inflate the requisitions, misrepresent the nature of the purchase, alter the shipping address, alter the receiving report as need be. So there's the flow chart for that. Okay, and then we said, buying things on the company credit card, or if the company has an open account with another company, fine. In which case, credit card, prior approval, it's not required. If it's a company open account with, the vendor with whom they do regular business, and authorization of the designated company rep is needed. So if that's the person pulling off the scheme, boom, you can get it done. And then you receive the merchandise. Well, if it's something you wanted, great. But if it's not, then you sell it, return it for cash or sell it online on eBay. You'd be amazed what people will do, what they'll steal and then sell on eBay. So much so that I found out when I was working with the Air Force Office of Special Investigations, the Department of Defense has people, all they do all day is look at eBay on what's being sold there. And amongst other things, they found somebody selling military secrets on eBay. Go figure, huh? And then, how do you prevent and detect personal purchases on company credit cards? Well, look at the credit card statement, all right? And maybe have two different folks look at it and reconcile it and, figure that all out. Okay, and then we've got, and as I say, well, like in the last chapter, whole bunch of ideas, great ideas on using big data and data analytics to detect these schemes. And, again, round dollar amount payments. You'd be amazed how many fraudsters fall for this. They make out the amount of the invoice to, $563 or even better, $500. No, hardly anything comes in an exact amount. Have it with a odd amount. Now I'm telling you how to pull off a good scheme. But there you go with some. I'm just going to fly through these as I think I did in the recorded lecture. Okay, now let's talk about check tampering schemes. But if you give me a moment, I'll be right back. Okay, I'm back. Sorry about that. Had to adjust the heat. It's getting uncomfortable in here. Okay, let's talk about check tampering schemes. And show of hands, I think I've done this before, but if I didn't, how many of you have written a check in the last week? How many have written a check in the last month? Raise your hand. How many of you have written a check in the last 6 months? Okay, we have one person. How about in the last year? Anybody write a check in the last year? Obviously, the person having 6 months. But yeah, you see, now if I had asked this question 10 years ago, even more so 20 years ago, but definitely before the pandemic, just about everyone had their hand up. But since the pandemic, writing checks has really fallen apart, or it's not happening. But companies are still doing it. Amazingly, banks, of course, they live and die by checks. And but most people are paying for things online, transferring funds online. However, as I say, companies very often, because they haven't changed or they like the documentation that a check gives them, are still using checks. So this is still a problem area. Not as much as in the past, but still problematic. I found out that my mortgage company, who, every month you pay some money for the mortgage and also for escrow to pay for property taxes, and in my case also my homeowner's insurance, that I got contacted by the homeowner's insurance, and they said, hey, we haven't received our payment yet for the premium on your homeowner's insurance. I said, well, the bank should have sent it out, and let me check. And they did. They cut a check and they mailed it, and it's somewhere in the mails. The check's in the mail. So hopefully they will get it soon, or the insurance company will bill me directly in addition, and then they'll get double paid. So not fun. Okay. But a lot of checks still out there. So 78% of companies were targets of payment fraud in 2017. It's might be down a little bit, but it's up there. 77% of organizations experience business email compromise. Okay, we'll talk about that, but it's basically, and I think, in the last few days, the university has sent out warnings of scams. Somehow they got a hold of a directory of students, and they're telling students, you have been dropped from the class and you'll have to contact us and give us your name, social security number, checking account number, whatever. But companies get this a lot. My favorite was a university in Canada that got contacted, and again, through using social networking and going online and figuring out who is the people in the accounts payable department at this university, and then going online and looking at their Facebook accounts and things like this. This person at this university in the accounts payable department got contacted by someone saying that they were the agent for, it wasn't Blackboard, but was another company like Blackboard that this university, that particular Canadian university used, and said, hey, how you doing? Julia, this is so-and-so. I'm the new account representative for Blackboard type company. And they knew who the previous representative was and said, I'm replacing so-and-so who got a promotion. And I'm here to inform you that we've changed our bank. Now, the Governor State pays a lot of money to Blackboard to provide this service. And so this fraudster said, to the person that they knew was the person who handled the payments for this university, kindly send, future payments to this address or this bank account. And they did for several months until the provider, the Blackboard type company, contacted them and said, hey, we haven't been getting paid. And said, oh, well, we sent it to that new account you told us about, that this person, who's that person? We don't know that person. And they figured out, somebody had contacted them, told them to send the money to this other account. So then the scramble was on to find the money. And what they found was the money was wired to this bank in Canada that immediately wired the money to, it went all, like Hong Kong and then Australia and then to the Seychelles Islands off the coast of Africa, which has become, every few years, some different country becomes the source of banks who are involved in schemes where they allow people to open up accounts in whatever name they want. There's no accountability and they don't disclose anything. Well, the Seychelles was it. They've improved. But previously it was the Cayman Islands. Before that was Switzerland. And then the money was gone. So it was several $1 million in Canadian money, which is still a lot of money. but it's through this business email compromise. Okay, so interesting stuff. Got to keep on top of that. 54% of BEC scams targeted wires, followed by checks at 34%. 77% of organizations implemented controls to prevent BEC scams. If nothing else, have education telling people, hey, we could be targeted for scams by scamsters. Again, 74% of organizations experience check fraud, slightly down. 28% subject to ACH, debit fraud. Okay, that's automated clearinghouse. That's wire fraud. And 13% subject to ACH credit fraud. 67% of payments fraud discovered by the organization treasury staff. Yeah, but as I say, very often it's because the money went out and then somebody who didn't get the money is complaining. So interesting. If any of you purchase a house, this has become a real problem in the home buying industry, where you're closing on a house, you're going to, buy your dream house. You've saved up for that down payment, and you've got, who knows how much money is going to be the down payment, and you're going to send that money to the real estate company or to the whomever is handling the escrow company, and you get instructions. You get, an email with instructions. Wire it to here. Okay. And you do. It looks good. It looks legitimate. And it's not. Because fraudsters from around the world, as I say, one of my Professor Fraud mottos is fraud never sleeps. Because while you're sleeping in bed, here in the United States of America, there's someone on the other side of the globe figuring out ways of separating you from the money. And one of the ways they do is hack into real estate companies, hack into, especially like things like title insurance companies that often act as the escrow agent, taking in and dispersing the funds for a purchase. Get that information, send out that phony email, and suddenly that person who saved up for years to buy a house, they just gave all their money away to a fraudster, and they may not be getting that house after all. Very sad situation. In fact, this reporter, when I was in Washington, I met up with a guy I've gotten to know, as I say, two-time Pulitzer Prize-winning reporter for the Washington Post. How we initially met up is he contacted me because of a fraud case they had out there of somebody stealing somebody's identity and then using it to buy a house. Okay, and that happens as well. Okay, so types of tampering schemes. The perpetrator physically prepares the fraudulent check. Okay, so you make up a phony check, and it's becoming easier with our AI out there. Okay, you can easily buy get a printer and get the right type of paper. You can print out a check. Of course, at the bottom of a check, those funny squiggly numbers with the account number and such on there, those are in magnetic ink, special ink that can be read by a high-speed magnetic ink reader that processes checks. Guess what? You can go online and you can buy a machine to print those magnetic ink characters on a check. I don't think it's there anymore. There was a store in Orland Park that sold that equipment as well. Or you just fool the company into creating a phony check and sending it to you. 5 methods to commit check tampering: the forged maker scheme, the forged endorsement scheme, the altered payee scheme, the concealed check scheme or the authorized maker scheme. Okay. So the forged maker, who's the maker? The maker is essentially the person who signs the check. Okay. And this is something I know a little bit about, all of this, because my father was an industrial engineer by training and profession, but he worked for a group of banks and put in a system so that tellers could look up the signatures of people on checking accounts, so that a teller at a bank could look up the signature and compare it to the signature on a check, whether that be the maker or the endorser. Fine. So if you're good at forgery, boom, you sign the check. So that's one way. Forged endorsement, you forge on the back of the check. Altered payee, well, the payee is on the line. It says pay to the order of. Well, that's the payee. Okay. We'll talk about that more in a bit. Concealed check scheme. Okay, that's where you get the boss to sign the check without having him read the rest of the check. And then the authorized maker is the boss who signs the checks is the fraudster. Okay, so I'm going to turn off my camera again. There you go. And let's go forward. Okay, the forged maker scheme. Legal definition of forgery includes not only the signing of another person's name to a document with fraudulent intent, but also the fraudulent alteration of a genuine instrument. The person who signs a check is known as the maker of the check. A forged maker scheme may be defined as a check tampering scheme in which an employee misappropriates a check and then fraudulently affixes the signature of an authorized maker thereon. Forged check schemes are usually committed by employees who lack signature authority on company accounts. Okay, so that's why it's a forgery. You're not the authorized maker, you're forging it, but you work for the company. Somehow you got it. So you need to have access to a blank check. You must be able to forge, a fairly convincing authorized signature and then conceal the crime. When I was auditing, back in my auditing days, very often the first thing you do when you go in to conduct an audit, you have people fill out questionnaires as to their practices. And I remember this one place, and then you check to what their answers were. And this one place, they told, we asked them, where are the blank check stock kept? And the answer came back was kept in a locked cabinet. Okay, cool. But then you check their answers. And what I found out was, they get, boxes of blank checks or check stock, and they kept it in the bottom of a cabinet that had a lock on it, but they always kept the key in the lock. Okay. Because that cabinet was also used for storing cleaning supplies that the night cleaning crew would use. So essentially, that check stock might as well just put it on a counter. Almost anyone had access to it. So easy access to not good. Okay. Moving on. There's our flow chart for this whole thing. First, you got to get a hold of that check. Now, again, you have employees who have access to company checks. But if the perpetrator does not have access to the check stock through their work duties, they'll have some other ways of misappropriating a check. Increasingly, you produce a counterfeit check. I had a case I was called in on of a school. They suspected that their treasurer was embezzling. Turns out that it was someone not associated with the school, but had been sent a check by the school for reimbursement or payment for something. And they then took that check and took, and again on a check, you've at the bottom, you've got the routing number and account number for that bank account, sent it in to one of these companies that print checks and had an entire box of checks delivered to them. They're getting better at not having check companies do that. But again, with laser printers, the ability to buy a magnetic ink printer, you can just create your own checks, okay, that look exactly like the checks the company produces. So you just make one up. How do you safeguard the check stock? Blank checks should be locked and strictly limited to those with authorization. Print your check on watermark paper, which is a little more expensive to get than just plain paper that somebody could reproduce. Look for out of sequence check numbers. So when your bank statement comes in, if there are checks that are out of sequence because the person, if they're creating checks, might not know what the number should be, okay? Or if there are two numbers the same, that looks weird. And at the end of the day, have your employees write down what the last check was that they used. And then on the beginning of the next day, make sure that the first check that they're, going to issue is the next number. If there are any checks missing, suspect something happened during the night. Okay, so that's number one. So you got to get that check. Now, who do you make the check out to? Well, you can make it out to you. If you're the perpetrator, make it out to yourself. That's dumb. Okay, because then you've just given yourself up. Make it payable to an accomplice. Now that could be, that homeless guy. I know we had this one scheme. They get these homeless men, bring them in, put them up in a motel, clean them up, get them some clothes, and then go with them into a bank and have them open a bank, just an individual bank account. And then they'd give him some money, said you can keep the clothes and send him on his way. But they have a bank account. So now they'd have the check made out to the name of that homeless guy, and they'd get the check and then would just deposit it into that account. But they got, blank checks. They had this guy sign, and then they just withdraw the money using those checks that the guy had signed. You make a check payable to cash. Okay, make it payable to cash. Most places will not cash a check, whether it be a bank or currency exchange, something like that, without you showing ID and signing your name on the back. Now, technically, a check made out to cash does not have to have your name written on the back, which is why very often places like bars, restaurants and such, they, if you know someone there, they'll say, hey, I got this check made out to cash. For $500. Tell you what, I'll let you have it, and you just pay me $300 in cash. And the bartender says, hey, that sounds like, and then just sends that check in with whatever other deposits they have. I mean, they're, wink, wink, nod, nudge, nudge. And they know it's a bad check, but they send it in with the deposit, and they pocket. They get $500 deposited. They paid $300 for that check. They clear $200. Or again, make it out to a vendor and then be able to open an account in a name similar to that vendor that will accept that check. So how do you forge the signature? Again, freehand forgery, if you're any good at all, yeah, you can do that. Photocopy forgery, so you get the person's, the actual person's signature, who signs the check, maybe off another check, maybe off some other document. And then you line up your check stock with, you cut out the signature and you put it on a photocopier and you run it through. Yeah, increasingly much easier simply to do it, with do it on your computer, okay, where you can just, apply a signature to a document, right? Create a Word or PDF check document and just drop that signature in. Automatic check signing instruments. Okay. A company that's issuing a lot of checks, the big boss doesn't want to sign, 400 checks a day. So you have automated equipment that can do it. And so very often that check signing equipment will be in the accounts payable department, and there'll be a key in that device for accessing it, or you'll have to punch in a code to get it to work. Again, I've seen companies have that, and they leave the key in the machine all day. Kind of defeats the purpose of having a key. Okay, I'm going to turn the camera on for a moment here. Ooh. This is not a check signing machine, but it's similar. Very often, if you're not doing thousands of checks, just a couple of dozen, rather than having the boss sign it, you'll have a machine like this. Now, this is a machine that puts the amount on a check. But a check signing machine is quite similar. You put the check in there, you take this handle, and pull it down, and it stamps the authorized maker's signature on the check. And you'll see, there it is. There's a keyhole back here in the back, and that's where the key goes. Unfortunately, I bought this at a flea market just because I thought it looked good on my shelf, being Professor Fraud and all. So it doesn't work because there's no key. But again, this is not, but a check signing machine is much like this. Though these days, again, it's electric. It doesn't have a handle. You press a button, but it'll still have a key or a keypad where you type in a code. But this machine puts the amount on a check so that you adjust these levers here to the amount, and it stamps the amount on the check and stamps it. By the way, it's very heavy. Also, I've used that as a doorstop. But also perforates the numbers into the check, which makes it difficult to change the amount of the check. Okay, so that's what that's for. It's an anti-fraud device to put the amount of the check perforated into the check, into the paper, so that it can't be changed. Because if somebody writes a check for $13 and doesn't put and no 100 cents, it leaves a space, it put in, a bad guy can fill in the word 100, 1,300 or $13,000. Okay. This way, that can't happen. Okay. Just one of the many toys Professor Fraud has. Okay. The forged maker scheme, how do you stop this? Again, strict procedures for the handling of outgoing checks. Again, do not, give the check back to the accounts payable clerk. Either the person who signs it mails the checks out, or they give it to their own assistant or somebody else. Okay. Again, safeguard the blank check stock. Establish rules for custody of unsigned checks. Separate the duties of check preparation and check signing. Have a restrictive list of authorized check signers, and it's good practice to rotate that as well. So if it's, the president or the vice, a couple of, president or vice president can sign a check. Well, after a year, put a different vice president in there. Okay. And maybe take the president off. Maybe he doesn't want to do it. So have two different vice presidents signing checks. And by changing it around, you can stop somebody who has been signing checks. And you have to do that with the bank. You have to have the bank send you new, or go into the bank and have those new people sign signature cards. Okay, establish rules for custody, separate the duties, separate, and then rotate. Oh, I just rotate authorized check signers, verify signatures on returned checks. Again, checks usually in the good old days, banks would send the checks back in the mail with your bank statement. Now they scan them and send you images, keep the images in their computer files, and then after a period of time, paper checks are destroyed. If a check is coded for a particular payment, you miscode it so that the actual person or actual vendor gets paid, but this one gets through. And then there's the converting the check. Okay. So miscoding can prevent it from being detected. But then once you have that check, what do you do with it? It's made out to, whomever. Well, again, there are any number of folks who will be more than happy to, so you endorse the back, and someone at a for some reason I always trash bars about this, but a lot come through bars. There's places where they'll take it, they won't give you the full value for that check, but then they just put it in with the other deposits for the day, and if it comes back to them, they go, well, this guy came in here, he's paying his bill, had this check, he endorsed it over to us, we took it. What can I say? I didn't know it was, how would I know it was fraudulent? You don't tell them the part how you paid him 50% for the value of the check. Okay. Now, that comes down to forged endorsement scheme. So let's say you work in the mailroom, and the boss's assistant comes down and says, here are the outgoing checks. Cool. Well, you intercept it, or somewhere else along the way, intercept that check intended for a third party. So in a forged endorsement scheme, the perpetrator is tampering a check that's already been written. All right. So it's a good check made out to somebody else. You intercept the check before delivery, if you're involved in delivery of check, including mailing. And by the way, there has been a big surge from what I've seen from my friends in the Postal Service of folks stealing checks out of the mail. Okay, breaking into mailboxes. At like apartment buildings, stealing checks out of the mail, on the mailboxes on the street, or going to the big blue box at the end of the street and just busting it open, or assaulting a mail carrier in order to get the keys so they can go around and open up those mailboxes. Okay, so you get the check. Maybe they have poor controls over signed checks. Checks get returned. That if you work in the mailroom, what you can do, change the address on the outgoing check so that it goes to a bogus address, and the Postal Service will return it. And if you're the person who handles incoming mail, you get that check brought right back to you. Or rerouting the delivery of checks, all those things so you can intercept it. Now, how do you convert the stolen check? Well, cash the check where ID is not required. Most places will require, unless, as I say, if you know someone on the inside at a bank or currency exchange, maybe you can get it cashed there. Otherwise, you double endorse the check. So if the check is made out to Joe's Plumbing, you sign the back of the check, Joe's Plumbing, and Joe Smith, or better yet, you double endorse it where you go, pay to the order of Bill Cressy, Joe's Plumbing, Joe Smith, and then this double endorse. The second endorsement is, for deposit only, the account of Bill Cressy, and I signed it Bill Cressy, and then you deposit that check again. That will be traced back to you unless you have that checking account opened by that homeless guy. This, non-complicit accomplice. And then you sign the homeless guy's name, deposit into that homeless guy's checking account, and then you withdraw the money using one of those checks that you had him sign before you cut him loose. Okay. There's our forward endorsement scheme flowchart. So how do you prevent and detect the theft of outgoing checks? Separate the function of cutting a check, that is, making it out, the signing the check, and then delivering the check. Train employees on what to look for. Investigate vendor complaints by someone independent of the payables function. Okay. Otherwise, the payables people say, they're just complaining. They got paid. Let's not use them anymore. They're troublemakers. No, somebody separate should look into that. The accounting system should be set out to detect duplicate payments, periodically generate payables reports, restrict authority to make changes to vendor records. Again, that's the idea of, and this has happened more than you would imagine, but where the folks in the mailroom have the power to change the address of vendors. So again, big check being mailed out to a vendor, go into the records, change the address for that vendor so that when a check is cut, it's mailed out to this bogus address. Either then you intercept it then, or it gets bounced back and you in the mailroom get that return check. And then you go in and change the address back. So it's, so it doesn't look like there's been a problem. Let's see. Investigate canceled checks with more than one endorsement. Again, that's increasingly difficult to do unless you get the checks back. Now you get, the image of the front of the check. Very often, if you want to see the image of the back of the check, you have to pay for that. All right. Chart the date of mailing for every outgoing check. Yeah, most places won't do that, but you might want to do that if you feel there is a problem. And then install surveillance camera in your mail rooms. And if you can't afford the surveillance cameras, of course, those are becoming quite inexpensive. Just put big glass windows. So you, at any time, the folks in the mailroom knows that somebody could be walking by watching what they're doing. Okay, now the altered payee scheme. So you got a check. It's made out to somebody, and you want to take that check, and it's a check for $10,000. Ooh, I wish I could put my name on that check. I'll tell you, when I was a commissioner, I was one of the folks authorized to sign some of the checks we had, and we had every now and then a 7-figure check that I would sign. And I'd always joke, gee, I wish I could change the name on this check to me. And the funny thing is, I know how to do it, but I didn't. So that's an altered payee scheme. So you intercept the check and you alter the payee, who it's made payable to. So if you have a check prepared by others, insert a new payee. Insert the false payee's name in place of the true payee. So, just different ways of doing it. Scratch it out and write it in there. One of the things you'll see, it's tax time, folks, right? In the past, if you had to make a tax payment with your 1040, the instruction said, make the check out to Internal Revenue Service, not IRS. That was because folks would take the letters, if it was made out to IRS, what would happen is around tax time, especially out in rural areas where you've got the mailboxes out on the street with the little red flags up saying there's outgoing mail, folks would drive up and down the road around tax time and open up those mailboxes and see if they were mailing in tax payments to the IRS. And if they were, open up the check, and if it was made out to IRS, hey, think of the letters IRS. You take the I, you can easily convert that to an M. So now it's Mrs. And then you have an accomplice, or you simply make it out to, Mrs. Jane Doe. And now you've got a check made out to how much ever that tax payment is, and you've had it made out to a name that you have an account for, and you can deposit it. And folks would do that, and then the IRS would come calling and say, hey, you didn't pay your taxes. Yes, I did. And only then do they look up the check and they find that somebody had changed IRS to Mrs. Jane Doe. So for the longest time, IRS 1040 instruction said, don't make out the payment to IRS, make it out to Internal Revenue Service. Well, a lot of folks still didn't do it. So now the instructions say, make out the checks to United States Treasury. Hard to change that one. Okay, so you want to make it out to UST, okay, but can't make that into a Mrs. very well. The other is enter the account payable system and change the names of the payee. So again, if you have access to the account payable system, and then when that check gets printed out, you go in, change who the payee is, and it gets made out to your accomplice or whomever, and then you go in and change it back, and that check gets mailed out. And again, if you change the address as well, it gets mailed to you. You intercept it. The company's computer records have been reversed, so it's back to the correct name and correct address, but you've grabbed a hold of that check. Tacking on would be if a check's made out to John Smith, you simply add on to the end, or Bill Cressy. And then if it's an or, either party can cash the check, which is why, folks, when you write a check, after you write in the payee's name, please draw a line along, so that somebody can't do that. Okay, so draw a line or two. So after you've written in the payee's name. Other ways is use erasable ink. Yep, it's out there. And if you're working in that accounts payable department and you are filling in the checks by hand, use erasable ink, and then either you or your accomplice gets a hold of it, erase the name, fill in the name you want. Or, get a hold of a blank check. Oh my goodness, the stories I've been on where, the boss is going to be away for a couple of days. So we had the boss, and you never know when he's going to be away. So we always keep 20 signed checks made out, not undated, no payee on it, just signed by the boss in case we need a check. Not a good idea. I even was involved with a medical place where the infirmary would have the doctor or a couple of doctors sign blank prescription pads. And so you get one of those pads, fill in whatever sort of narcotic you want, go to a pharmacy and get yourself whatever you like. So you shouldn't have signed blank prescription pads, and you shouldn't have signed blank checks either. And how do you convert an altered check? Well, you make it out to yourself. You just cash it. Make it out to that shell company, that account made out for that or opened by that homeless person. And then you can just go in and transfer the money out, write a check off the account, whatever. And voila, you've got the funds. Now, one of the other ways, I'm going to turn the camera on and tell this story, of course, is was invented in Iowa and Missouri some decade or two ago by mostly motorcycle gangs who were in the business of cooking meth. And again, they would drive up and down, I think I may have told you this story, up and down the roads looking for the mailboxes with the red flag up, grab the check made out to whomever, made out to the electric company, bring it back home, put a piece of tape over the payee name, leave the date, I'm sorry, take that out. Just the opposite. Put a piece of Scotch tape over the date, over the signature, okay, the maker's signature, but don't have it on the payee name. Don't have it on the amount, whether written out or the numerals, or don't have it on the memo. Then you take that check, roll it up, drop it into a 2-liter bottle. That's what they usually used. And with a mixture of chemicals, which I know, and in the past I've demonstrated this, and you swirl it around, pour out the chemicals, pull that check out, and now that's called check washing, where you now have a check that has the payee wiped clean, the amounts wiped clean, and the memo wiped clean. But you have a piece of tape that you first you dry it, hang it on a clothesline, maybe hit it with a hairdryer. You slowly take that Scotch tape over the date. Heck, if you wanted to wash the date off, you could do that. But the key is you peel it off of the signature. You've got a good signature. Essentially, you have a blank check. And then you make it out to whatever account, make it out to cash, make it out to, the bogus account. And for whatever amount you want, amount big enough that you think it won't bounce. And now you go and cash that check. And as I say, I have demonstrated that in the past. I know how to do it, and I'm not sharing it with you. But that's the old method. That's the chemical method. And again, this were the folks, if you watched Breaking Bad, folks that knew chemistry would know how to do this. Nowadays, with our wonderful AI, rather than check washing, we have what's the term they use? I'll think of it. But now you simply take that check, put it on your copier, okay, your printer glass, copy it, and then you have AI take that check, remove the payee, remove the amounts electronically, fill it in whatever amount into whatever payee, let's say cash you want, and then, but the signature remains, and then you create this new check. Or you simply lift that signature off and apply it to blank check stock, okay? Let me see. See if I can find that term real quick. Well, I can't find the, let me see. Well, okay, I can't, it's called not check washing, called something else. Well, I'll think, if I come up with it, I'll tell you before tonight's class ends. Okay, so so that is another way of creating that check and altering the payee. Okay, and here's our flow chart for that. How do you prevent and detect it? Separate again the duties of check preparation, signing, and delivery. What I would say in delivery, deliver it directly to the post office or to the person. Okay, do not, put it out on a, a place to be, that's accessible. Okay, or even in a mailbox if you can. Separate the duties of reconciling the bank statement from the other check preparation functions. Use those carbon copy checks. Again, if they're manually doing it, where it creates a It's actually a carbonless copy. You're not putting a piece of carbon paper in there, but it makes a check, a copy, and then you can go back to see who the check was originally intended for. And draft all checks in permanent ink. I'm trying to find, where's my check signing pen here? Ah, it's here somewhere. I can't find it. Where's my check signing pen? It's actually, what you want is gel ink, G-E-L ink. So go to the store, and most stores, have gel ink pens. Where is my gel ink pen? It's probably attached to my checkbook. Usually I just clip it right on my checkbook. So get a gel ink pen, G-E-L. I think I've mentioned this before. Regular ballpoint pen ink is easy to wash away. The gel ink soaks into the paper, into the fiber of the paper. So if that meth cooker motorcycle gang member gets a hold of your check and tries washing off the payee name, it won't come off, or at least enough of it won't come off that it makes the check unusable. So you're still going to have to pay your electric company or the IRS or whomever, but they can't make a bogus. So use gel ink, G-E-L. And I don't know where my checking. It's probably, as I say, I usually attach it to my checkbook, which right now maybe my wife has it. But use gel. And the person who told me that was Frank Abagnale, or who promoted this. Frank Abagnale, again, if you ever saw the movie Catch Me If You Can with Leonardo DiCaprio and Tom Hanks, Leonardo's, or as we call him, Leo's character is Frank Abagnale. He was this, fraudster, and that they made the movie about. In fact, he appears in the movie, if you do watch the movie, and it's one of the movies on the list, in the scene where they arrest Leonardo DiCaprio, supposedly in France. It was actually filmed in Quebec City, Quebec. The French police detective who's shoving Leonardo DiCaprio into the back of a police car is Frank Abagnale, because he was a consultant on the movie and was there, and he thought it was great fun to be able to manhandle Leonardo DiCaprio. So the guy pushing him in, that's my friend Frank Abagnale. But use a gel ink pen for that. If you want to use a Sharpie, I guess you can, but it kind of, because that also soaks into the paper. But the gel ink is a much better way. Okay, moving on. The concealed check scheme. Okay, so you've got that boss, and you're the person who brings in the checks, and you lay it down on his desk, and we have all these checks laid out where all you see is a signature line, and the boss comes in and he just signs one check after another, And I'll tell you, it's tempting. When I was signing checks for the Board of Elections, sometimes, they'd come in with 24 checks for me to sign. And it's tempting to just line them up and just sign the signature lines. But no, being me, I'd take each one, and they'd always give me the paperwork, compare the amounts, compare the vendors, that's me. But you submit the fraudulent check along with the legitimate check. So if there's 24 checks, well, in there is a bogus one. Again, I'm going to turn my camera off here. And the perpetrator is almost always the person responsible for preparing the checks. And you've got that very busy boss, inattentive boss, who is, just signs the checks, okay? And you deliver it, during the busiest part of a busy day. So they're not going to take the time to review all the checks and the paperwork and all that. Okay. So there you have the concealed check scheme. Now the authorized maker scheme, that's where you've got a boss who's a crook, who's a fraudster. An employee with signature authority that writes fraudulent checks and signs their own name can override controls through intimidation. They have just poor controls because the boss can maybe after everyone's gone for the day, walks down into the accounting department, has got keys to everything, just pulls out a check, makes it out to himself or to however he wants to cover it up, and signs the check. Again, I've seen cases like that. It's if you have that boss who intimidates people, that is one way of doing it. Okay. A similar situation, I think I may have mentioned this, we had some years back a Hollywood studio where, let me turn this on. In fact, the Association of Certified Fraud Examiners, top award they give every year to a non-fraud examiner, to a layperson, is the Cliff Robertson Sentinel Award. Cliff Robertson was an actor. You can look him up on IMDb. He since passed away. Did some, Oscar-nominated stuff, movies and things. In any event, I forget which movie he was in, but Cliff was also this kind of guy. He started out acting on Broadway. He did not come from a wealthy family. Now, his wife was also an actress and later became his ex-wife, but she came from the very wealthy Post family of Post cereals. Okay. In fact, her family owned this place down in Palm Beach, Florida, named Mar-a-Lago, that somebody else has since bought. In any event, she comes from this very wealthy family, but he did not. So, but he loved doing his own taxes. He had an accountant in New York City from doing Broadway. And every year he'd get all his paperwork, go back to New York and sit at a big table with his accountant. And they're going through the paperwork and telling stories and eating sandwiches and stuff like that. Okay. And they're doing it. And the studio sent Cliff this advice saying that he was paid, I forget how much, let's say, $2,000 as an advance for doing promotional work for his movie. And Cliff was, his money, and then the accountant said, wait, I don't have any record of you depositing a check for that amount. And they looked and looked and looked, couldn't find it. I don't know what that's all about. So Cliff goes back to Hollywood, goes to the studio, goes into the accounting department, says, look, I got this advice for this, payment. I'm going to say $2,000. What was that? I have no record of receiving that. Well, let's see. And they went and they found, that's when you were out promoting whatever movie. And we gave you a check for $2,000 to as an advance to help pay for promotional costs. I didn't get it. Can I take a look at the check? And again, this was back in the days when banks would regularly mail back, canceled checks to the customers. And they found the check, and there it is, check made out to Cliff Robertson. I said, really? They flipped it over, and there's no endorsement on it. Well, it's made out to me. It was cashed because you got it back, and I didn't endorse it. Nobody did. It got cashed somehow. And they looked at the back, and it was cashed at a Wells Fargo branch located across the street from the studio lot. Okay, well, give me a copy of that check. I'm going to go over there and find out what happened. And that's what he did. And again, he was a big movie star at the time. So he goes walking into the branch, and the people in the bank are like, ooh, that's Cliff Robertson. And he goes into, asks for the branch manager, and he goes into the branch manager's office and say, well, back last year I got this check was made out to me. It was cashed here, but I didn't sign it. And the branch manager says, oh, yeah, that's right. Of course not. Like all the others. What? And the branch manager explains, well, every Friday afternoon, the head of the studio comes in here, and he's told us that, these big stars are out promoting their movies, and they need cash to pay their expenses while they're out promoting. And, these big stars, they don't want checks, they want cash. So he brings in these checks made out to each of you big stars, and he hands them over to me. I add them all up. I go in the vault. I get that much cash, put it in a little case, hand it to him, and he goes and has it distributed. So you must not remember getting the cash from the studio boss to promote your movie. He's like, nope, never got that. And he started asking around to, and apparently this branch manager mentioned some other stars. So he went around talking to some of these other stars, and they're like, we never got any cash to promote our movie. And eventually he went to somebody he knew on the board of directors who looked into it. And it turns out, and they had if I recall, it was a private detective follow the head of the studio one day. And sure enough, here he comes, Friday afternoon, comes out, crosses the street, goes into the branch, meets the branch manager, hands over these checks. They give him all the cash. He walks out, goes back across the street, gets in his car, and they followed him to his home in Palm Springs, California. Real nice town, by the way. So he was ripping off the studio because, again, he had the ability to intimidate. Because he was the big head of the studio, and the branch manager of the bank isn't about to tell the head of the studio right across the street that I'm not going to cash the checks for him. And as a result, the board fired the guy. Or they let him go. But they didn't say anything about it. They didn't report it. And as a result, that guy got a job as the head of a different studio and put out the word that Cliff Robertson is to no longer be hired by any studio because he was out to get me. And he was blackballed. And so for a couple of years, Cliff Robertson, the best he could do was like in the Round Theater. I remember he actually was in Evergreen Park at the old Drury Lane Theater in Evergreen Park, and doing things like that. And here he was like I think he won an Oscar, and it was because the studios blackballed him for having the audacity of blowing the whistle on a studio chief who was embezzling, essentially. And the board let him go, but did nothing else, and he ended up as the head of another studio. Well, eventually, that other studio found that he was ripping them up for even more, except this time, that board was going to have him arrested. And that studio chief killed himself. And then the whole story broke. And after that, Cliff Robertson was able to make movies in Hollywood again, which tells you a little bit about the ethics of Hollywood. Hopefully it's changed for the better, but don't count on it. In any event, somebody who can intimidate others has the power to do that. Okay, so that is really the essence of the authorized maker scheme, or in most cases. Okay, so again, the second bullet point overrides all the controls through intimidation. Again, taking the camera off, they have poor controls. And how do you stop it? Separate the duties of preparing and signing checks, ensure signers don't have access to blank checks, require dual signatures for large disbursements. That is a biggie. But in this case, he would have these checks for the advances just under the amount necessary for 2 signatures. Have an up-to-date vendor list, confirm all disbursements to vendors, but the big one is have separation of duties and enforcement. And one of the first things that I've had a couple of cases like this, both as an attorney, as a lawyer, as an attorney, as a CPA, as Professor Fraud. First thing you should do if you go and do an audit is find out, does someone have the ability to override the controls because they intimidate? Again, I had a case at a university where that took place, And yeah, it's not good. There's your authorized maker scheme flow chart. So how do you conceal check tampering? Most employees remain with the company as they continue to steal from them. Check tampering schemes can present especially tricky concealment problems for fraudsters because they have to hide the identity of the criminal and hide the fact that the fraud even occurred, and has to explain the check on the books. So if you have the fraudster as the person who pulls off the fraud but also reconciles the bank statement, hey, you can hide the existence of the fraudulent check. Just say, yep, everything's fine. Again, if you get the checks returned from your bank, a few banks do that, a few still do that, remove the fraudulent check from the stack of return checks and destroy it. Increasingly, again, the banks image the checks and destroy those checks themselves, but that image they keep permanently. But the bank balance won't reconcile to the book balance. But if you're the person doing the reconciliation, you just force it. Bank statement can be intercepted and altered to hide the crime as well. Make up a bogus bank statement that would reconcile. Another thing is re-alter the check. So if you do get the check back, well, erase your name, put in the proper name. Everything matches out. It's effective for the altered payee, forged maker, authorized maker, and concealed maker scheme, except you got to get the check back. And again, most checks do not get returned from the bank anymore. Okay, and so it can be any of those schemes if you get the checks back, which often doesn't happen. But then you may also need to falsify the disbursements journal. You write the check payable to yourself, but you list a different person in the books. Any alterations in the books should be scrutinized. Falsely enter amounts of legitimate checks in the disbursements journal. And it'll be the cost of the fraudulent check will be absorbed by an overstated legitimate check. This type of concealment is really effective only when the bank accounts are not closely monitored or where the employee is in charge of reconciling the accounts. The fraudster can code the fraudulent checks to accounts that are rarely reviewed, so no one's looking at it, or so active that they just give it a cursory glance. This method can be very effective in concealing fraudulent checks, particularly when the victim company isn't diligent in reconciling bank statements. Okay. Again, one thing is to reissue the intercepted check. So you got that intercepted check and you did your thing with it and pocketed the money. Well, that vendor, for example, is going to complain if they don't get paid. So you re-enter the invoices so the vendor does not blow the whistle when their checks get intercepted. Okay. The employee purposely does not mail a check and reissues the payment to the vendor. So you so you have two checks issued for one invoice. So you intercept the check and then maybe have the vendor call up and say, hey, I didn't get paid. Okay, well, must have got lost in the mail. We'll send you a new one. And then you cash the check that you intercepted. Create bogus supporting documents. Again, some fraudsters attempt to wipe out all traces of their fraudulent disbursements by destroying the checks. Others will manufacture fake supports, fake invoices, purchase orders, receiving reports, which has become so much easier with personal computer document generation. Only practical when the employee writes the check to someone other than himself, which again is really the better way. I'm going to skip through. I'm going to have you take a look at these big data and data analytics techniques for finding tampered checks, because we got a lot more slides to go through, and just to get through this chapter, which we're behind. Okay, payroll schemes. Based on fraudulent time cards or payroll registers, causes the organization to issue a payment by making a false claim for compensation. Three main categories of payroll fraud: the ghost employee scheme, the falsified hours and salary scheme, and the commission scheme. Okay. It's funny. A couple of years back, one of the big accounting firms, I won't say which one, wasn't a big four, but like the next tier, they had me go on tour, if you will, around the Midwest to a number of big cities in the Midwest. Professor Fraud, talking about fraud, and they'd invite their clients from that city, and I'd put on a story, and we'd talk about ghost employees, and I would, say, how many of you know what a ghost employee is? And in some of these cities, one or two might know what a ghost employee is. In Chicago, just about everyone knew what a ghost employee was. And one case, the person said, yeah, my uncle was one. So that's reassuring. Chicago's reputation is deserved. Okay. So that's someone on the payroll for a company who does not, in fact, work for the company. Usually, often an accomplice of the fraudster. Sometimes it's the fraudsters themselves. They just don't work for the company, or they did at one time, or somehow they're able to get payroll checks issued to them. Okay. So 4 steps in the ghost employee scheme. You get the ghost added to the payroll. Timekeeping and wage rate information must be collected. Paychecks must be issued to the ghost, and the check must be delivered to the perpetrator or accomplice. Okay. And there's a little flow chart there. And let me ask you, folks, turn the camera on again. Did I tell you about the case I had where I was auditing a bank that had to deal with ghost employees and the secretary to the president of the bank? Did I tell you this story? Raise your hand if I told you that story. No, I didn't. Okay, well, here's the story. Okay, so I get sent out to with an audit team early in my auditing career to audit a suburban bank. Okay, small, just one branch, just the main branch, suburban bank. And I was told, okay, audit payroll. It shouldn't be hard. As a small bank, it should be fine. Okay, first thing you do, again, you give a questionnaire out where you find out how things are done. So there's one vice president fills out the questionnaire, and then you go over it and say, okay, now payroll. You have questions, and they're like, who's in charge of employee records? That was the secretary to the president of the bank. Okay, flip again. Okay, do you use time cards or timesheets? We use timesheets. Okay, who collects the timesheets? That's the secretary of the president of the bank. Okay, who prepares the payroll every 2 weeks? Secretary of the president of the bank. Okay. Who sends that information off to your payroll service that prepares the payroll checks and such? Oh, we don't use a payroll service. Oh no, well, who does that kind of work? Well, that's the secretary of the president of the bank. Okay. Let me guess. Paychecks are prepared by the secretary to the president of the bank. And I was told, no. Oh, great. No, we don't use checks. You don't use checks. No, we pay everyone in cash. We're a bank. We have a lot of cash. I see. And so who pulls together the cash to pay the employees? The secretary to the president of the bank. Okay. Who distributes the cash to the employees? Secretary of the president of the bank. Okay. Now, excuse me. Can you folks see a problem here? You have one person who controls employee records, who prepares all the payroll records, who goes into the vault and fills up little pay envelopes with currency and coins and delivers them to everyone. The only control they had is after they delivered, they signed off a little sheet with their next to their name. Okay. Think of what you could do in that situation. You control the employee records. You could create the ghost employee. Make not just one, a couple of people out of thin air. Create their timesheets, because this woman collected the timesheets. Make one up. Put them on the payroll. Go into the vault, collect the money. Even without doing that, just if the person is supposed to get paid so much an hour or so much a week, go into their records and change it, but don't tell them. They get paid their usual amount, but if anyone audits it or checks it, it matches up. It was, and then again, if you've got a ghost employee, this is the person distributing the checks or distributing the pay envelopes. Just pocket the ones for that ghost employee. Sign a name on it. So I went back to my bosses, and they had budgeted me, I forget, 20 or 30 hours, because it should have been simple to audit this. They said, oh boy, okay, this could take a week or more, because what I had to do is get those, and plus the other thing is, after somebody leaves employment of the bank, this one could keep them on the pay, just keep getting them paid. So I had to go around to all the employees and get samples of their signatures to compare to this one control they had to make sure these people existed. In a couple of cases, they were no longer with the bank. I had to contact them and make sure that they existed, compare these signatures, run all the numbers. As I say, it took over a week. But then at one point, towards the end of this process, we're working out of the conference room at this bank, and who walks in but the secretary to the president of the bank, and she's in tears. Because, as you can imagine, with me going around getting everyone's signature and all this rest, the rumor mill has been going full speed ahead. And they're finally going to get her. Apparently she had some folks who weren't her fans. And the auditors have got her now, blah, blah, blah. And so she comes in tears. I didn't do anything wrong. Okay, no. It's just you have no controls. We can't, just let it go by. Apparently the previous auditors didn't do it, didn't audit payroll. At least not properly. As it turns out, from all of our testing and everything else, this woman paid everything correctly to the penny. No money was missing. I mean, she could have stolen a lot of money. Nothing. What an idiot. I mean, what a wonderful employee to have. I'm sorry. No, she could have done it, and it would have been hard to prove. Right? So, and so we wrote up a big thing on what kind of controls that they needed. But she was in the perfect position to create ghost employees, create personnel files on them, and an auditor comes along to audit. Okay, let's look at the person's personnel file. There it is. It's check that they're getting paid the right amount. Are they here? Oh no, they're not here. Of course, usually you don't verify, go meet the person, but in this case, I had to go meet all the employees to make sure that they existed. Anyhow, bad situation, incredibly honest employee. And, but as we said, they had to change. They eventually, they on our recommendation. They went with a payroll system, a payroll vendor. You know, we convinced her, look, your job is going to be so much easier without having to do all this, manual payroll that she was doing. Anyhow, yes, ghost employees, fun stuff. Okay, so again, if you have the authority to add the new employees, or just have the ability to add them without the authority, as this woman did add, she did the payroll accounting. Okay, if she wanted to, employee got terminated, she could keep getting them paid. She could prepare fake time cards. She was the one who approved the time sheets, in this case, time cards. They weren't paychecks or pay envelopes, and would deliver it. Okay. Again, often delivered to an accomplice to prevent suspicion. By the way, there was a, you may remember in the news a couple of months ago, maybe over a year ago now, the village of Harvey down by Governor State, the new government, village government went in there, town government, and they were afraid that they had a lot of ghost employees. So they had one pay period where they would not make direct deposits. They would not mail out paychecks. You had to come in, show your employee badge, and get checked off a list before they would give you a paycheck. I don't recall any follow-up that there was any problems with that, but that's one way of seeing it. There's ghost employees. How do you prevent and detect? Separate the hiring function from the payroll duties. Personnel records should be maintained independent of payroll and timekeeping. The personnel, or as we call it these days, HR, department should verify changes to the payroll. Periodically check payroll for the personnel records. Again, for those terminated employees that are still getting paid. Run a report looking for employees who lack Social Security numbers. Okay, that's a red flag right there. And but also check those Social Security numbers to see if they're the same as any other employee, especially people who are involved in payroll. Because sometimes that's what they do. More often they use like their kids or spouse's number. Distributor of checks should be independent of the payroll function. Again, a lot of this can be handled if you use a payroll service that does direct deposit rather than handing out paychecks. Another scheme is the falsified hours and salary. Most common method of misappropriating funds from payroll is through overpayment of wages. If you have manually prepared time cards, forward to supervisor's signature, collude with the supervisor. If you got that rubber stamp supervisor, just signs off on everything. You have poor custody procedures, time clocks and other automating timekeeping series. You have someone else clock in for you, okay, and clock out for you. So you come in late, but you got your buddy who'll clock in for you. Okay, nowadays they need their, maybe their company ID to do that. Interesting, a number of firms now have, you have to have your ID, and they can track your movements. So even if you have your friend clock you in, they can check the records and they can see that you were not in the building until 3 hours later. The other thing you can do is change the rate of pay. So if you're able to, maybe collude with the payroll people to change your rate of pay, even though you are a lazy bum and don't deserve a raise, and they give you one anyhow. Okay. And there's our flow chart. How do you prevent this? Separate the payroll preparation, authorization, distribution, and reconciliation. Again, separation of duties. Overtime, sick leave, and vacation should get authorization from a supervisor. Verify wage rate changes. Restrict access to those approved time cards so that after the boss signs off and approves your time card, you can't go back and change that 1 to a 7. Okay. Supervise, again, the time cards after the supervisor signs off on it, and we see this one all the time. They sign off on the timesheet or the time card and then hand it back to the employee. Not smart. Again, you change the numbers. Supervisors should be present when time cards are punched, but that's not going to happen. Not usually. Maintain copies of time cards. I don't see that too often. Actively test for overtime abuse. Comparison reports, trend analysis, exception reports. Is there one employee that's getting 90% of the overtime? Well, perhaps it's a very valuable employee that they or perhaps that's bogus. Okay. Commission schemes. Okay, if you work on a commission, usually you get a salary, and then on top of that, you get a commission, maybe a percentage of the sales that you make. Okay. Commission is a form of compensation calculated as a percentage of the amount of sales a salesperson generates. Two ways an employee on commission can fraudulently increase their pay: falsify the amount of sales through making fictitious sales, altering the price, or stealing other people's sales. That's the ones that'll sometimes get for fist fights. And increase the rate of your commission. Okay, it's kind of like increasing your salary or your pay rate. There's a commission scheme flow chart. And how do you detect it? There should be a linear correlation between sales and commission expense. So if everyone gets 5% commission, okay, what were the how much were the total sales? Okay, how much do we pay in commissions? Okay, and it comes to 12%. Okay, we have a problem here. All right. Comparative analysis of commissions earned by each salesperson. Somebody just got huge commissions compared to the rest of the folks. Something's going on, especially if they're all doing about the same work. Track uncollected sales generated by each member of the sales department. That could indicate, right, phony sales being booked. And then conduct random sample of customers. Okay. Very often, if you get called by a company for a follow-up call, check on your service and see if you're happy with what we did. Yeah, they might be very much interested in the product and the service and things like that, but is also part of a good fraud detection program. Call them up and say, so how did you like your new washer and dryer? We didn't buy a washer and dryer. We bought just the dishwasher. Or we just bought a dryer. We didn't buy a washer. Okay. So follow-up calls can generate leads for a fraud examiner. Here again, in this one, we got 7 pages or 7 slides of data analytic techniques. Again, I would ask you to read those over yourself, maybe even keep them. These can be helpful for you in the future, especially if you take data analytics class. Okay. This is one of my favorite, the expense reimbursement scheme. Okay. For example, I just took a trip to Washington, and fortunately, Governor State did not have to pay for any of it. Your tax dollars did. Okay. But generally, if you're doing business for the company and you incur expenses, the company will reimburse you for them. Cool. So the employee makes false claims for reimbursement of fictitious or inflated expenses. Very common form of occupational fraud, and one that, by its nature, can be extremely difficult to detect. You have 4 methods to generate those fraudulent reimbursements. You mischaracterize the expense reimbursement. You overstate the expense reimbursement. You just have completely fictitious expense reimbursements or multiple reimbursements. Okay. I got lots of stories on this one. One of my favorites is these 4 guys were heading to a conference, in another state, and they all submitted reimbursement claims for each of them driving to the conference. So they each sent in travel reimbursement claims. Great. Except that what they did instead was one of the guys had a big old van, and so they all got into the one guy's van, and only one of them drove, or only one vehicle, they may have shared the driving, drove to the conference with all of them in the van, and they had a good old time. But they all submitted expense reimbursements as if they each drove their own vehicles and were seeking expense, travel expense for that, mileage, etc. Unfortunately for them, they decided that, hey, let's all meet up and get in the guy's van. Let's meet up at work. So they all drove their, I think there might have been 5 guys. So we got, they got the driver of the van. Okay, fine. And the other 4 drove their cars to the company parking lot and parked them there and left them there for several days, got in this guy's van and they left. And as it turns out, they were parked directly below the window of the person who handled the travel expenses. And who is wondering, whose cars are those down there? Okay. And they were there overnight and everything. And so it got detected. Oops. Okay. So anyways, let's move on. Mischaracterized expense reimbursements. Oh my goodness, there's so many tales here. I could tell. I know there was one guy I knew who would go to a fundraiser for some charity, and they sell raffle tickets, and so he would write a check, and they'd go around to the tables during the event, and he would write a check for $200. Okay, would see this person going around the tables, collecting cash for the most part, and selling the raffle tickets, and would say, "Hey, how much cash do you have?" And they'd say, "Oh, I've got about $500 worth of cash." Tell you what, I'll write you a check for $500. Give me $100 worth of raffle tickets, and then give me $400 cash and change. And then, of course, he would submit a expense reimbursement form for the $500, when in fact he only bought $100 worth of raffle tickets and took $400. Another famous case, this is actually an ethics case I use, was a guy who had to fly to South America on business, and the company authorized for him to fly business class. Cool. So he would book a business class ticket, get all the paperwork for that, and then cancel it, and would then book a coach ticket, a lot cheaper, and would fly to South America on coach, but then submit the business class receipt, okay, and get reimbursed for the more expensive ticket. And one of the things there is, very often if a company wants to send you business class, it's for a couple of reasons. One, they want you to be comfortable. 2, especially they want you to be comfortable when you get there so that you can conduct business well. 3, if you're in business class, you're meeting other people, okay, and you're networking for several hours. You're trapped in that section meeting other people, and that can be helpful. They don't want you flying coach, okay? They're not just trying to be nice to you, okay? They want you up there in business class. So again, that's another way of mischaracterizing your expense. Okay, off with me. So here's the mischaracterization. Well, one is request reimbursements for personal expenses, claiming personal travel as a business trip, listing dinner with friends as business development, and so on and so on. The fraudster may submit personal receipts with their reports to show business purpose. Okay. mischaracterized scheme can be extremely costly. So here's a little flow chart on that. I've got lots of more tales. They're popping into my head, but I'm going to keep moving. How do you prevent and detect mischaracterized expense reimbursement? Organizations should establish a policy that clearly states what types of expenses will and will not be reimbursed. Explain what are considered invalid reasons for incurring business expenses, and then set reasonable limits for those reimbursements. You should have a detailed expense report. Establish a policy that clearly states what will and will not be reimbursed. Scrutinize expense reports approved by a supervisor outside your department. Okay, so if I come back from a conference and I have my expense report and I give it to someone in the College of Arts and Sciences to sign off on it. Why isn't it given to someone at College of Business? And again, flag expenses made during the person's vacation time or leave time. Okay, that would seem odd. And sometimes it happens though. You're on a vacation, you run into a good business prospect. It can happen. Overstated reimbursements, overstate the cost of the actual business expense. You can do that through altering receipts. Oh goodness, I actually knew this guy. He would pay for, a couple of ways of doing it. Take a bunch of folks to dinner and say, tell you what, guys, just pay me cash and I'll just put it on my credit card, and then submit the get reimbursed for the entire dinner for everyone, where he now had these other people give him cash for it. Or I've seen this where ask the waitress to give them a blank receipt that they can fill in later with bigger numbers. Okay, so you alter the receipt, you overpurchase, overstate another employee's expenses, or place orders in order to overstate expenses. How do you stop that? Always require original receipts. Not even photocopied receipts, because those can be, sometimes that's what you have to do. But if you can get original receipts, and I've gotten to a point where everywhere I go, sometimes they're like, oh, can we just email you the receipt? No, you better print one out and give it to me. Do comparison reports to other people, especially if you've got a couple of people going to, a conference, to the same conference. Somebody submitted something that's double what everyone else did. That should be looked into. And then, randomly spot check expense reports and look at that detail. Here's your overstated expense flow chart. What about fictitious expenses that get reimbursed? Okay, so you invent a purchase. So 3 basic fictitious expense schemes. Create that fictitious receipt. Again, if you're asking for a restaurant to give you a blank receipt, that's a good indicator that person may be doing that. Okay, there's the obtaining the blank receipt from a vendor, or claiming the expenses of others who may be submitting to their own company. Okay, so here's a fictitious expense slide. How do you prevent this? Okay, an employee uses credit cards for lower dollar expenses but pays cash for high dollar expenses. That seems odd. Okay, and then gets reimbursed for this cash that they paid. Expenses that are consistently rounded off, ending in 0 or 5, tends to indicate the employee is fabricating the numbers. You'd be amazed at the stupidity of people that submit rounded off numbers if they're pulling a fraud, which is, yeah, it happens 1 in 100 times, but generally not. Patterns in which expenses are consistently for the exact same amount. Reimbursement requests from an employee that consistently falls at or just below the reimbursement limit. Receipts from restaurants that are submitted over an extended period of time, yet are consecutively numbered. Okay, from a restaurant or wherever. Yeah. Are you the only employee or are there only customer at that restaurant? Again, you would think you'd be smart enough not to do that. Receipts or other support that does not look professional or lacks information about the vendor. Again, it's increasingly easy to generate professional looking documents, invoices, what have you. What was it the other day after the Supreme Court struck down the President Trump's tariffs? Governor Pritzker sent a letter to President Trump asking for reimbursement for the people of the state of Illinois for paying these illegal tariffs. And along with the letter, had his people, or maybe he did it himself, generate a professional looking invoice with the, whatever, hundreds of millions of dollars to reimburse the people of Illinois. But I found that particularly funny that they generated an invoice that looked professional. Okay. The multiple reimbursement scheme. Submit a single expense several times to receive multiple reimbursement. It's the least common of the schemes. So use several copies of the same receipt to generate multiple reimbursements. And then charge an item to a company credit card, and then, so the company's paying for it on the credit card, but then take that receipt and submit it for reimbursement to yourself as if you put it on your personal credit card. I could have done it with this trip last week. You had the federal government paying my expenses. Well, I could have submitted something to the university for expenses as well. I didn't because I'm an honest person. Okay. How do you prevent that? Enforce policies against accepting photocopies of support, because I'd have to send two different, I have to send receipts to both the federal government and to the university. And by the way, that would be the dumbest thing because that would be a federal offense, right? Right. Don't want to do that. So I'd have to send one of them a photocopy. So I have a policy against photocopies. Boom, that takes care of that. Establish what types of support will be acceptable. Flag duplicate payment amounts, expense. So if you get the same thing submitted twice to the same entity, okay, that looks odd. Expense reports that are approved by supervisors outside your department, that would seem odd. Establish types of support that's accepted, and establish a policy whereby expenses must be submitted within a certain time frame. The feds, they wanted it in 5 days. So this past weekend, I was working on my expense to make sure I get reimbursed for the trip. Here's some more data analytics, things, so you can determine how to find these reimbursement schemes. Now, the register, the cash register, the point of sale terminal disbursement schemes. You create a false transaction recorded to justify the removal of money from that cash register. The two basic ones are a false refund and the false void. Okay. So the false or fictitious refund, probably the bigger of the two. So the customer comes in and buys something. Great. Okay. But don't give the customer their receipt, right? This is why so many companies have a policy that tell their employees, okay, if you ring it up, you hand the goods to the person and you hand the receipt to the person. Don't just put it in the bag unless they request it, all right? Because if you've got that receipt, now you can process a refund. So you process a refund even though there's no actual return. The customer walked off with the merchandise, but you've got the receipt. The fraudster then takes cash from the register in the amount of the false return, and you go in and process it as if the person came back and returned the goods and you gave them a refund. Debits made to the inventory system showing that the merchandise has been returned. But in most big retail stores, they don't have retail inventory control good enough to detect that it didn't come in. Or you overstate a refund. So the person brings in something for $100 and you process the refund for $200. You give the customer the $100, and then you pocket $100 yourself. Okay. Credit card refunds. Ring up the refund credit. Ring up that first refund should not be there. Ring up a credit refund, but use your own credit card instead of the customer's. And that does not require you to take cash out of the register. That happened to me once at an office supply store. An office supply store whose name I will not mention, but whoops. See what that is? That might give you a clue of where it happened. Okay, I was returning something to that store that I bought on my credit card, and the person took it and said, "Oh, we can't process refunds at this register. I have to go to the one way over there." Right away, the hairs on my back of my neck are going up. Red flag. So I'm watching, and she's got her back to me. I see her doing some odd things, and I was also buying some stuff. So she rings up the sale. I give her my credit card. Rings up the sale on the stuff I was buying. As far as the refund goes, she pulls something out of her pocket and throws the receipt in the bag, hands me the bag, and she said, "Well, have a good day. Thanks for shopping at this company." So I go out into the little area between the doors, and I look, and there's the receipt for my purchase. No receipt in there about the return. Okay. So I go back in, and I said, "Oh, you never gave me the receipt for the return." And her face went, "Oh, well, we're not supposed to give those back." "Oh, okay, fine." So I go out and then go back in the store and go back to the back where the management offices are and say, "I think you've got a problem here." And in the meantime, I got on my phone to my credit card, and it showed that no credit had been applied. And I said, "I think you have somebody who just took my return and applied it to her own credit card. Take a look at the video," because they had cameras. And I said, "I'll leave you at that. I'll be in touch." And yeah, that's what she was doing. They refunded me my money, and she was let go. And I'm not sure if they ever pressed charges on her, but that's one way of doing it. Okay. And there's no cash involved. It was all applied to her credit card. So there's your false refund. The false void, not as popular. It's so again, customer comes in, buys something, but you keep the receipt and you process a void sale. So it's as if the customer came in, bought something with cash, and then as they're walking away, decides, "No, I've decided I don't want that after all," and walks back. And this is what they're saying, and void that sale. And so you void the sale and you give the customer back their money, except they didn't return the stuff. They wanted the stuff. They kept the stuff. You just processed the void. You had that receipt in order to do the paperwork to justify it and justify the cash coming out of the cash register. Okay. Managers generally must approve voided sales, as they should refunds and returns as well. Okay. Some fraudsters will forge a manager's signature if they're not a rubber stamp approval. The bigger thing now with point of sales terminals, the really cash register, the manager approval for a refund or a void in the olden days, a lot of registers, again, was a key, and the manager would have the key, put it in there to authorize the refund. Now it's a PIN code. Okay, they enter a number, the manager's number, to authorize the return. The bad employee will shoulder surf the manager, see what that number is, and then enter it themselves. My favorite I've seen at stores is where on the cash register, on the point of sale terminal, is the little, post-it note where they list everyone's PIN code. Stupid, because now that bogus employee will process the refund as if one of their fellow employees is processing it, and then enter the manager's authorization code to process the refund. And so then if that, if there's any trouble, they're going to go after your fellow employee and not you. Unless, again, you can look at the videotape or find out that, that person wasn't working that week, they were out sick, what have you. But don't put your numbers on a post-it note or keep them there near the register. That's dumb. Okay. Again, managers will sometimes conspire with the register employee and share in the proceeds. There's your false void. Okay. So how do you conceal those registered disbursements? You're going to have inventory shrinkage. True, but two methods to avoid detection. If they're, again, inventory shrinkage is usually written off to things like, shoplifting. Okay, so I was recently at a store, and the employee there told me, "Oh yeah, well this branch of the store has the greatest amount of shoplifting going on." And I didn't say it out loud, but I'm thinking, or your employees are stealing the stuff, okay, or processing false refunds or false voids. And the shrinkage is that the stuff has not been returned. So how do you avoid detection? Small disbursements, okay, death by 1,000 cuts. Keep the size of disbursements low, below the management review level. And then if you think they're onto you, destroy the records. Okay, concedes that management will discover the theft and prevent management from discovering who the thief is. So they know they're losing money, but all the records have been destroyed. Aside from shrinkage, a registered disbursement scheme leaves the victim's organization's books in balance. And again, if management just writes off the inventory shrinkage as, excuse me, as shoplifting, boom, the employee has gotten away with the theft. How do you prevent this? Again, management approval should be required for all refunds and voided sales. Cashiers should not be allowed to reverse their own sales. That's why very often you'll get a receipt, and on that receipt it'll say, "Hi, I'm Bill." That way, when the customer comes in, the employee looks at the receipt. If it's me, I go, "Oh, I'm sorry, I did this sale. There's my name. We're gonna have to get another employee to process the return." Okay, so that's why sometimes you see the first names of employees on receipts. Voided transactions should be properly documented. Require a copy of the customer's receipt. Okay, and a distinct registered login code for each employee, and again, keep them distinct and private. Don't share it. Don't put it on the post-it note on the cash register. Periodically generate reports of all reversing transactions. Scrutinize multiple amounts below management's review level. So if you got, all these, we usually review if it goes over $500, and you got all these $490 refunds. Okay, take a look at those. This is a biggie. Encourage your customers to ask for and examine receipts. And as I said, I used to love the old Boston markets where they'd say, if we don't give you a receipt, you got a free cookie. They never got that free cookie. But get your customers involved in fighting fraud through encouraging them, offer them a prize if they don't get a receipt, encouraging them to get a receipt. Or one of the other ways of doing it is you put a sign up and say, no refunds or no returns if you don't bring back a receipt, or if you walk away and don't ask for one, something like that. So, so you got carrot and you got stick. Okay. And again, the random customer service call to those who have returned merchandise. Oh, I see you returned that fur coat. Was there something wrong with it? No, I've got it right here. Okay. Always good. Okay. Here's the big data slide number 1. And here's slide number 2. And there's the copyright. Whew. That was a 91 slide chapter.